Assalamualaikum warahmatullahi wabarakatuh, and hi everyone. As we know, Fintech has been popularized in the financial industry, covering various activities such as payment, financing, operation, risk management, and etc. So, what the meaning of Fintech? Fintech is used globally to combine two common words, which is finance and technology. It's divided into several main types, such as mobile payments, investment including crowdfunding, and etc. In Sharia, technology is neutral as long as it does not contradict its principle. Thus, to provide Muslim consumers and entrepreneurs with economic opportunities in line with the result of conventional finance, initiatives have been launched to create financial instruments and institutions based on Islamic principles. For example, Sukuk market. This video presents to explore the future trends and challenges Islamic financial technology or Fintech.
Moving towards digitalization era. The phrases of digitalization, digital Islamic revolution, and digital transformation are habitually mentioned in this last decade. The process of digitalization, particularly in the Islamic banking industry, entails the transformation of a financial business model through the use of digital technology. Big data, artificial intelligence, robotics, blockchain, cryptocurrency, and mobile phones are among the technology involved in this scenario. In Malaysia, the investment account platform IAP is the first fintech platform for Islamic banking to serve as a hub marketplace for funding small and medium business SMB and SME. Next, the Malaysian Digital Economy Corporation MDEC has been founded by the local government as an agency tasked with developing Malaysia's digital business ecosystem. The common financial operations such as bank transfer, bill payment, and online purchase can be completed at any time and from any location as long as an internet connection are available. Blossom Finance, a company based in the United States, introduced the first smart Sukuk TM platform in 2018. It is made up of Sharia compliance elements from beginning to ending. All smart contracts would use only Sharia approved structures such as asset-based lease, which is ijarah, and profit sharing, mudharabah. Moreover, the Ethereum blockchain will be utilized to allow shareholders to participate in the digital sukuk, which will then be used to support Sharia compliant microfinance firm in Indonesia. As a result, blockchain technology has been able to improve Islamic trade financing through a variety of financial activities.
Next, I will present about the future trend of TechTech. So basically, TechTech is a Sharia compliant variant of InsurTech. TechTech is a subset of Fintech in Islamic finance that combine the word Takaful as well as technology. TechTech is a keyword that specifically refers to the application of technology in various aspects of Sharia compliant insurance or Takaful scheme. It is to revolutionize the Takaful sector by complementing existing initiatives to expand Takaful to the underinsured segment of the population. The global Takaful market hit 19 billion in 2017, according to the figure released by Thomson Reuters, and is projected to exceed 40 billion by 2023, which translates to a compound annual growth rate of 13%. There is huge potential for the expansion of existing players and the launch of new players. Most importantly, InsurTech has begun to change the all business model of both traditional insurance and Takaful in many ways. Industry analysts agree that there are two key issues that need to be focused to make the Takaful industry fit for the future. First, with the advent of new technologies, Takaful need to leave traditional tight niche market and address large number of customers. Second, Takaful companies need to create new business model for next generation insurance buyer. With the emergence of a tech-savvy generation that grew up with the internet and stood up during the digital transformation, person-to-person customer service are considered as old-fashioned. Internally, Takaful companies should use innovative technology including artificial intelligence to control costs and perform trend analysis to reduce risk, and increase business speed.
Financial technology is also evolving and may be further required for improvement in financial infrastructure in terms of convenience and user friendliness. Now, mobile payments are considered the latest evolution in the field of electronic payments and the biggest opportunity in the mobile payment industry with high growth potential. Mobile payment is defined as any payment in which a mobile device, either phone or tablet, is used to initiate, authorize, and confirm the exchange of monetary value in return for goods and services. So, it is clear that the use of mobile payments means cashless payment methods such as its predecessor, namely credit cards, online bank transfer, and check slips. This method is very efficient and effective for any payment, especially retail payment system. Having long dominated cash payments for centuries, it is only fitting for the public to recognize mobile payment methods as an advanced innovation from existing method and actively use in the future in line with the rapid flow and development of technology.
Okay, now we will discuss about the challenge of fintech. The first challenge is threat to data security. With the advent of fintech, more data is now available in digital format, which make it easier to analyze and generate observation, but it also make data more vulnerable to security breaches. To make it easier to understand is that when more services go online, data will be everywhere, and consequently data security will not be guaranteed. Then it turns out it will be a major challenge of fintechs. This influx of users has caught the attention of hackers and cyber criminals who are hunting for anything from personal financial detail number to credit card detail, which they will then sell on the dark web or leverage for themselves. There are two solutions that can solve this challenge. First, by updating the fintech app to make it more secure. Among the factors that need to be in place so that the apps will be more secure are two-factor authorization, biometric authentication, data encryption and coefficient, real-time alerts and notification, and behavioral analysis. Second, enforcing a mechanism that disposes of a customer's data securely owns he or she cases to subscribe from the use of fintech service. One of the challenges of fintech is too strict regulations. Fintech should not too strict regulation in financial products. However, the fintech innovation needs to be explored. The purpose of Islamic financial values, such as how to use technology to ensure minimum risks in musyarakah and mudarabah model, financing, and how salam can be managed and optimized using fintech. According to Firmansyah 2019, have mentioned that Islamic fintech firms need to be improved in regulatory aspect. The government needs to provide support rule for the Islamic fintech sector and not too strict. This is because rules that too strict will result in problems such as neglecting the protection and privacy of customers. Other than that, the rules should protect all parties involved in Islamic fintech practice such as firms, investors, and customers. Lastly, it is important to improving in regulatory aspect. We provide support rules for Islamic fintech sector to attract the interest of many people around the world. That's all from me. Thank you.
An inexperienced and unskilled workforce is also one of the challenges faced by Islamic financial technology. Since the commencement of the Islamic finance businesses, dedicated human resources have been a missing component. Malaysia has a number of educational institutions that successfully provide Islamic finance education, and according to URIS 2013, Global Islamic Financial Education Report, it is the second largest provider of Islamic finance education, trailing only Pakistan. However, when it comes to financial technology, specialist knowledge is still lacking. Despite the fact that many universities provide theoretical understanding of Islamic finance, there is still a scarcity of relevant skills for working and innovating in the fintech industry. There's no doubting that Sharia compliance is the most significant part of any financial products labeled as Islamic. But in order to use a judgment on cutting-edge technology, it's necessary to have a complete understanding of it. As a result, there is a significant imbalance between demand and supply of personnel specializing in Sharia, finance, and technology, not only in terms of knowledge, but also in terms of practical skills and innovation. Equipping youngsters with the required information and abilities is the most effective strategy to handle the issues of Islamic fintech facing a less knowledgeable and unskilled workforce. This problem can be solved in two ways. There are long-term knowledge and skill-based solutions and short-term knowledge-based solutions. The long-term solution entails changing academic institution curricula. Basic Sharia, finance and technology knowledge can be found at the primary and secondary levels of education, whereas knowledge of Islamic finance and fintech can be found at the advanced levels. Specializations in Islamic fintech as well as hands-on experience should be offered in the same way that specialization in Islamic finance has been. The International Center for Education in Islamic Finance is the only AACSB accredited university in Islamic finance. As a result, Malaysia can adaptedly benefit from it and should concentrate on providing students with not just the necessary knowledge but also the necessary abilities. Given the amount of graduates with degrees in Islamic finance in Malaysia, the state students-owned universities or fintech companies can support them to complete short online courses. Given the quick rate of technology innovation, both of these solutions must be given significant consideration by all actors in the Islamic financial business, as addressing this problem in the coming years will be more challenging. Although fintech applications in the banking and capital markets industry are well known, little attention has been paid to Tech or Takaful technology. This is a Sharia compliant for traditional insurance businesses. Tech, an Islamic financial fintech subset that combines the word Takaful and technology, aims to modernize the Takaful sector by supplementing existing attempts to expand Takaful to a part of the underinsured population. Tech is a relatively new term that refers to the use of technology in various aspects of Sharia-compliant insurance or Takaful schemes in order to supplement existing practices, increasing financial inclusion, provide services to the underinsured, and promote best practices in service delivery to policyholders or participants. Finally, there appears to be an overabundance of focus on technology rather than the fintech financial component. This is why most frameworks do not consider the Sharia and its hermeneutic concepts to be relevant in fintech applications. While words like Islamic financial technology may not be necessary, the use of fintech apps for Islamic financial services and products should not only to be properly regulated under the laws of various countries, but a focus should also be placed on Sharia governance. Despite the numerous benefits of fintech applications, several regulatory difficulties in the worldwide Islamic financial services business remain a key concern.